The highlight of day 3 at the International Monetary Fund and World Bank Annual General Meetings in Washington, D.C. was a panel discussion on boosting productivity in the digital age. Here is an excerpt of the report from Arise Business Correspondent Rotus Oddiri.
The IMF World Bank meetings in Washington, D.C. hosted a high-level panel on boosting productivity growth in the digital age. The panel featured IMF Managing Director Kristalina Gorgieva, entrepreneur and philanthropist Tony Elumelu, Alphabet President and Chief Investment Officer Ruth Porat, Saudi Arabia Minister of Finance Mohammed Al-Jaadan, and MIT Sloan School of Management Professor of Entrepreneurship Simon Johnson. Artificial intelligence dominated the conversation, with IMF Managing Director Gorgieva asking the audience for a show of hands to see how many use AI compared to those that don't.
How many of you, let me expand, are using AI already? Raise your hand. Okay. How many are not using anything and you think this is really a nuisance? Nuisance people?
Oh, there's one in the back.
One in the back. Okay. So here is your answer. We are already moving in the world of AI, and the question is how quickly, how effectively across the board, and is AI going to be a source of further convergence or a divergence within countries and across the world?
The chairman of the United Bank for Africa, Transcorp PLC, and Heirs Holdings, Tony Elumelu, said productivity is more than output per worker, and that the digital age presents Africa with an opportunity to leapfrog in its development even further.
You know, when we talk about productivity in the digital age, it's not just about output per worker. Productivity is really about opportunity per person. In Africa, we see this age as we see the challenges and we see the prospects. We have leapfrogged in the past, and we think that this digital age presents a great opportunity to leapfrog further in the area of healthcare, agriculture, and even in the area of electricity.
Now, Elumelu did mention healthcare. On that point, Ruth Porat, President and Chief Investment Officer of Alphabet, parent company of Google, talked about how artificial intelligence is making an innovative impact in drug discovery, and said that boosting productivity is about reimagining the art of what is possible.
First and foremost, very much to your point, is clearly innovation. The creation of new businesses, new lines of opportunity. So for example, at Google, I'm honored to work with Nobel Prize winners. 2 Nobel Prize winners, Demis Hassabis and John Jumper, created something called AlphaFold, for which they won the Nobel for chemistry. It is the 3D prediction of protein structures. It is described as the greatest contribution to drug discovery in our lifetime. They open sourced it, so now more than 3.5 million scientists around the world, 190 countries, are using it to create businesses, create solutions. That's the kind of radical rethink of what is happening that is needed to get a productivity boost. It has to be reimagine the art of the possible.
Simon Johnson, professor of entrepreneurship at the MIT Sloan School of Management, said there's still an open question on how artificial intelligence will impact productivity depending on how it alters the labor force.
There is a brilliant potential future in front of us which runs through AI. The problem, though, David, is if this is going to be more like railways, for example, which had very positive transformative effects across society, you need 2 things to happen with AI. One is automation. That's clearly already happening. It's somewhat, I think, that's already what's in the room, was just demonstrated, that people are using AI instead of asking somebody else, instead of using some other approach to dealing with issues. But the second thing that you really need is new tasks. Does this technology create new tasks, particularly new tasks that demand human expertise? So what happens to the demand for labor? And in order for Kristalina's 5 out of 5 score on the productivity front, you need people who are displaced by automation to go on and do new things, and you need new people entering the labor force to find new productive tasks. If it's the case that, for example, we create a lot of tasks, but you don't need any skill or expertise to do them, then people are going to get pushed down to a pretty low wage level, and that's just within the United States. As Kristalina said, we have a lot of advantages in the US when it comes to starting new businesses. When we look at the rest of the world and we think about the global division of labor, if there's a lot of automation, including in manufacturing, including in everything that's consumed in the United States, for example, where are the new tasks for the world? Who gets those jobs? What are those jobs? How do people feed themselves? So I'm less optimistic than the managing director. I'm more of a 1 or 2 out of 5 on the productivity transformation. I think it's going to change society profoundly, or it already is, but are we going to be able to convert that at the world level into productivity gains and share prosperity? That's the open question.
Saudi Arabia's Finance Minister Mohammed Al-Jaadan echoed comments from IMF Managing Director Gorgieva 3 weeks ago, where she spoke of being concerned by the deepening AI divide between countries.
I think I will be possibly the person who's going to give you the different side instead of just celebrating AI. Few things I would note. One is it is very critical to recognize that there is actually a serious gap within the global economy between countries and then within countries itself. I mean, even though the managing director talked about the US and the benefit that they are reaping from AI, I think what we need to be careful is that gap is actually widening, which creates significant challenges within countries. And this is why you see the serious issues in the political ecosystem, not only in the US, I'm talking about globally, where people are feeling that they are being left behind. And I think the AI may likely actually increase that gap. So one will need to be very careful. Second, I think the talent is, from a government point of view, you will need to make sure that talents are provided the opportunity to be reskilled. A lot of jobs are likely to be impacted, and you need to make sure that those impacted have an opportunity to be reskilled. Without that, we are going to widen the serious gap that a lot of countries have.
Entrepreneur Tony Elumelu said closing the digital inclusion divide would require mobilization of capital and accountability on the part of government for the impact to be seen on the African continent.
We must know that inclusion is not automatic. Inclusion is deliberate. We need to have African voices on the table. And we must understand that digital inclusion in the 21st century is economic inclusion. If we want to deal with inequality, if we want to create and democratize prosperity across the globe, we must deal with some of these issues we're talking about here. So yes, we need smart partnership that works. Smart partnership that can help mobilize investment from domestic across the continent and from private sector across the globe without putting pressure on government. But government must provide accountability, transparency, and help to create the enabling environment that will allow the private capital mobilize to work for people so that collectively we can improve productivity, efficiency on the continent.
Kristalina Gorgieva also spoke about the risk of financial instability from artificial intelligence.
Financial stability risks related to AI. Yes, it is a tremendous opportunity, but we are now at the point when there is a huge concentration of financial assets in this country and in AI. 75% of the financial assets of this planet are in the United States. In other words, savings of Africans may be here rather than helping Africa to build infrastructure for its future. Why? Because of the dynamism of the US economy, and there is huge optimism that leads to valuations being perhaps stretched. So if there was to be all of a sudden disappointment and people pull their money, that could create financial sector instability.
Despite the risks, the managing director of the IMF said change is inevitable.
Change is unstoppable and change is accelerating.
A truly engaging panel at the IMF World Bank meetings. Reporting from Washington, D.C., Rotus Oddiri for Arise News.